glad you guys are spending time with us this morning. Hopefully you'll have some fun. You'll learn something about taxes and business that maybe you didn't know, or something you did know and you wanted to know a little bit more about. So I am here. Jason, will you be speaking?
Only as, you know, you may need me to interject on behalf of something that's bank specific. You know, obviously I feel as though it's best to allow the expert to provide the expertise.
Okay. That's Jason from Wintrust, Jason Swan from Wintrust. So, you know, take down his information so that you all have that when you need business banking questions answered. Okay.
Well, I guess we could go ahead and get started. It's 11:06, and I believe as people join in, I'll make sure I take attendance. So just to make sure that everybody has their name spelled out so that I can take attendance for and give you credit for this workshop.
Okay. Are we ready to get started then, Quandra?
Thank you.
Yeah, I think you can go ahead and get started, ma'am.
Okay, not a problem. All right, well, let me just tell you a little bit about myself. My name is LaChondra Davis. I am an accountant for over 20 years. I have worked for for-profit, non-for-profit organizations. I started out with Element Public Relations, went on to McDonald's Corporation, have a strong financial reporting background, worked for nonprofits as well. Most recently, well, I shouldn't say most recently, probably 10 years ago, my last corporate position was with the House of Blues Chicago. I was their business manager, which is technically their controller. And for the last 10 years, I have been the sole owner Figure It Out Accounting and Tax Services, where I provide business and accounting solutions, and I primarily work with small businesses and non-for-profits as well, in addition to tax preparation. So I guess we need to go over the objectives for today. Just want to let you guys know that today we're just going to talk about federal and state local requirements for small businesses and identify methods for researching local municipality and county reporting. Depending on where you start your business, what town you're in, that's going to dictate some of the things that you guys are going to need to do. But we're just going to move right along. I see more participants are coming. Have you guys had a chance to take a look at the material for today? Did you glance through it? Did you look at it? Be honest, it's okay. I'm just going to roll with whatever you all are. I'm going to meet you where you're at. Great, I got a lot of, all right, so that's good. So tell me this though, are you all having trouble with taxes, understanding what your corporation or your business should be set up as? Are you having questions or concerns about that? Okay. All right, well, let's just get moving right along. So let me ask some questions. Since some of you are driving, we won't put up the PowerPoint. If you do have the presentation, I'd like for you to kind of follow along. The information here is critical. I'm glad you have it. I won't necessarily go on every single point, but I will touch on them. But you have this as a resource. And after having read this and just thinking about my own experience as an accountant, as a professional, with business and taxes, this is a very good resource, and I would encourage you all to keep this on hand throughout your business career. I just have a quick question. How many of you already have
Ms. Davis, I
Yes.
just had, Ms. Davis, real quick. So they do not have the presentation. It was not sent to them prior to.
Okay.
Just
Okay,
so you know that.
okay.
Yeah.
Okay, great.
All right.
How many of you guys have businesses already?
Well, they all should have businesses. They're all small business owners from our program, Sunshine Enterprises. So hopefully everyone on the line has started or is in the process of starting their business. So these are all small business owners.
Okay, okay. All right then. Well, we had some.
So if you want to take a moment, if you would like for them to maybe share a little bit about themselves and their business, if you want to do something like that,
Yeah,
that may be helpful to
you guys.
Okay.
That would be perfect. Thank you, Quandra.
Absolutely.
Mr.
And I
Swallow.
apologize. I've just had some technical issues this morning, but I thank you for your patience.
Okay.
So if you want to start with Ms. Moore, Ms. Moore, if you can tell us a little bit about your business, we would love to hear it.
Okay, Miss Quandra, thank you for nominating me. I'm Eurydice Moore, and the name of the business is Eurydice, and I assist people in setting up non-for-profit article incorporation bylaws, and I help them to attain their 501c3 status with the Internal Revenue Service. I also have products, books that I have written. I was blessed to write. I have 4 books. One is how to start a non-for-profit for those that can't afford my fees, and resource development, how to, because people, all they think about is grant, but there's other avenues, other options. So, and then I have autobiography and another non-for-profit books. So I do workshops, seminars. Quandra will be proud of me. I have a workshop coming up next month.
Okay, make sure I get
And
invited.
I do grant writing, and I've been writing grants, Quandra, especially what's been posted from the governor office. And Together Now, I've written a lot of grants on that.
Well, we need to talk. I'm gonna follow up with you after this call.
Okay.
Let's talk to Ms. Watson.
Hi, my name is Marilyn Watson. I'm in the beginning stages of starting my construction company. The name of my company is Monroe Construction and Renovation.
Nice. Thank you for that. Ms. Rita? Okay. Well, we'll come back to you, Ms. Rita. Ms. Sandy, and it looks like you're doing hair, so do you have a minute to talk? Okay. Look like you're working.
I am always working. So I'm Sandy Lewis Kadiri. I
Hello?
am. Oh, can you hear me?
Yeah, we can
Hello.
hear you.
I'm
ahead.
Sandy Lewis Kadiri. I'm Sandy Lewis Kadiri. I'm the owner of Studio SLK Hair Salon in Evanston. So I'm at work, so I can't take too much time away from my client, but I wanted to be here, so I'll be on mute.
Thank you. Let's see if I can get her off mute. Okay. Ms. Franklin, if you can unmute yourself. I thought I could, but it doesn't look like I can. Oops. You're not off mute, Ms. Franklin. I'm sorry.
Okay, I'm Jacqueline Franklin. I am owner of a jewelry accessory business. I recently set up a website on Shopify, and I noticed that they're taking county taxes. I wasn't expecting that. I was expecting like the federal or the Illinois sales tax, so that was different. But that's it in a nutshell for now. And I've been doing this
Thank you. Perfect. Thank you, Ms. Rita. I'm sorry.
Hi, I'm from Johnny Mae's Southern Cuisine, and my business is Southern food, soul food, and I specialize in cheesecakes. About a week or two ago, I passed my last exam because I had to take 2 exams in order to, I had to acquire my licenses in order to prepare food for the public.
Okay.
You know, I had to follow a lot of safety protocols and food safety protocols and procedures to keep the public safe.
Okay, great.
I
Well,
got
thank
all
you.
my training out the way. I'm in the process of acquiring my business license with the city of Chicago
Perfect.
and finding a kitchen to, I found a kitchen. I got a quote for a kitchen. It's only $86 a day. That's no skin off my nose in the figure.
Okay.
So
Well, we have to keep going, Miss Mona, but thank you so much for sharing your business with us. We're gonna have to keep going, but thank you, appreciate it.
All right.
Thank you. So we're gonna, real quick, just maybe less than a minute, your name and the name of your business. Thank you. Miss Rhea? Miss Rhea, are you?
Oh,
That
hi,
was Miss Rita.
Ria. So my name is Ria Butar. So besides I'm a worker, I work for a company. I also help my husband with his financial services business that I really need to explore that. So somehow when I look at some this Google or something, they give me the information of the business, and I join your webinar. I joined. I just realized you guys in Chicago. I'm in Houston.
Oh, that's fine. That's fine. I mean, this information is universal, so please, you know, stay on and ask as many questions as you need to as we go through the presentation. Thank you.
Yeah, and then I think this is a good place for me networking as well for anybody, you know.
Absolutely, absolutely. Ms. Hines?
Hi, my name is Martine Hines, and my husband and I, we recently started a dump truck company. In June, we purchased our first commercial dump truck. So yeah, it's called Hines Transportation.
Nice. Okay. And Ms. Ford, 1 second, 1 minute or less.
Okay, yes, my name is Mona Ford. My business name is Mona's Creation, Catering, Realty, etc. I create jewelry, t-shirts, lip gloss, soap, oils, purses, sunglasses, eyelashes, glittered glasses, little tutus, whip, shea butter, everything, you know, that I see that I can possibly make. I've been in business for over 2 years now. I've really been been in business for about 5, but I didn't start getting serious with it until about 2 years ago. Well, after I took Sunshine Enterprise classes, and then I started, you know, getting more and more serious about it.
Okay, thank you. Okay, well, I think we went around. Thank you all for sharing your business and what you all have going on right now. Really appreciate it. Okay, I'm gonna turn it back over to you, Ms. Davis, and I promise to be quiet going forward.
Oh, no. Please jump in. Ask questions as you're familiar with the businesses that are here. It'll just make the class better. All right, so here's like 3 questions I just want to run past you all to get you thinking about what we're discussing today. Question number 1, are you able to identify your federal tax reporting requirements for a small business owner? Do you have an established plan to? What was that?
Show of hands. How many people? You can raise your hand or hit the icon. Okay, some people put in the chat no.
Okay.
Okay, a few people said no, some people said yes.
Okay. So we'll take that as 1. All right, question 2. Are you able to identify general, state, and local tax requirements for your small business and establish a plan to pay for those taxes? Okay, those are ones. Number 3, are you able to identify methods for researching these particular rules and regulations for municipal and county taxes? Who was that who mentioned county taxes? You're just selling online, I think it is. Well, our plan and our goal is that after this workshop, you will be able to answer these questions that I've just asked. Okay, here's another question. Here's interesting. What most small businesses pay income tax on? What do you pay income tax on? Do you know? Is it gross income, net profit, net income, or gross profit?
Growth.
Okay. The answer to that question is actually net profit. What are the 2 basic accounting methods? Cash, debit, accrual, or fiscal? It's actually cash and accrual, so make a note of that. We'll get on to discussing that later. Which of the primary taxes does your business pay? Income tax, self-employment tax, state income tax, a luxury tax, or is there a local tax?
Income tax, because I'm sole proprietor.
Okay. Most businesses will pay income tax, self-employment tax, if you're a sole proprietor, state employment tax, and local taxes, if applicable. If you are self-employed and have an incorporated business, which of the following forms would you file for your tax return? A Form 1040 Schedule C or CEZ, a Form 1065, Form 1120S, or will you be filing a Form W-2?
1040 C.
1040 Schedule C. For now.
1040 Schedule C is for sole proprietors. The CEZ is also a form that's used as well. Form 1065 is for partnerships. We'll talk a little bit about that. Form 1120S is for S Corps. And then a Form W-2 is what employees file with their tax returns. So if you have a business and you have employees, then you're issuing W-2s at the end of the year. So there's other taxes related to that as well. Okay. Well, now that we've gotten informed, we're getting started. So I went over a couple things that your primary business taxes are your income taxes. Everyone's familiar with income tax. Sole proprietors, partnerships, limited liability companies, and S Corps show their net profit on their owner's personal income tax. That's critical. I'll say it again. Sole proprietors, partnerships, limited liability corporations, and S Corps show their net profit on their owner's personal income tax. So the income tax paid for those types of businesses or owners all are reported on your individual tax return. With the exception, a C Corp files a separate tax return that is a corporate form 1120, and that tax rate is a flat tax rate established by the federal government. This year, I believe it's might be 21 or 22%, but it changes as Congress changes it. Self-employment tax, that is whether you have a part-time business or not, you're going to pay self-employment tax. It's wrapped up into your Form 1040 based off of your Schedule C, but it's accumulated and processed there, and it's calculated, and that's part of your own individual income tax return. Employment taxes, we discussed that a little bit. That's your Social Security, Medicare. If you've been an employee, everyone is comfortable knowing what those are as an employee. As an employer or business owner, you're responsible for paying a portion of that as well. This may or may not apply to you right now, but it may in the future. There's also excess tax, a sales tax, and the local taxes. And it just depends on where you are in your community. What do you do? So one of the important things here is that you'll need your tax identification number. Make sure you have that. Keep handy your IRS tax form, because throughout your business, you will be asked to present that particular official document. Now, we mentioned sole proprietorships, partnerships, S Corp, and C corporations, and then limited liability corporations. All pay federal income tax. As I stated, your sole proprietors are paid through your 1040. Partnerships must fill out a Form 1065 first. That's a partnership tax return. In addition to that 1065, there's a Schedule K. Each partner would receive a Schedule K, and then that income is then in turn reported on the individual's tax return. Your S Corp, a similar thing happened. Just like with the partnership, there's a Schedule K, except the form is an 1120S. And so that would be like, if you, let's say you had 5 or 6 people that were partners in a business. They each might have a different percentage of the partnership, and that's when an 1120 would come into play. And then typically what happens is that the income and the losses are allocated to each partner based on their percentage of ownership. That's the only difference with an S Corp and a partnership, is just the tax form that you file and how you set that up. Then there's a corporation that's a standard flat. One of the things that I want to say is that when you set up your business, whether it's a corporation, sole proprietorship, limited liability corporation, you must tell the IRS how you want to report your taxes. So if you are an S Corp, you can select to be treated as a corporation, but you have to select that. There's no automatic assumption that's there. So be mindful of that. And if you're not sure, then speak to your tax preparer or an accountant as to how you want to do that, especially if you have business partners. It's more complicated when you have business partners or members, such as some people that may have or participate in the LLC. But sole proprietors is a little simpler because it's the sole owner. So no matter what happens, it's gonna end up on the individual tax return. Now, what I'd like to say is by the end of this, I would like for you guys to be able to say, my business is a blank, and I would need to file this federal tax form. So for example, my name is LaChondra Davis. My business is accounting and tax services, and I will need to file a form 1120S. I am incorporated, but I also know I need to form a file 1040 as an individual to report that income on my individual tax return. In the case of Ms. Moore, sole proprietor, you might file a Schedule C. Again, it's attached to your Form 1040. Employment taxes and forms. Those are just your federal Medicaid, your 941 employer, payroll taxes. That's important. Is anyone here employees right now? Do you have employees? Miss Sandy? Anyone else? Anybody in the chat, Quandra? Okay. Ms. Moore asked about an LLC.
I'm sorry, and I'm going in the chat.
Okay, sorry. Okay, that's an excellent question, Ms. Moore. An LLC does not require a separate form. An LLC is only a classification type for a corporation. It does not carry its own separate tax form. So an LLC will either file a sole proprietor Schedule C. Okay. It may also file an 1120 if there are other members of the LLC. Okay, 1120S. Again, it's based on how you select with an IRS how you want to file your tax returns. So I'll give you a brief note on that. Basically the difference is this. If the income is passed through to the individual, then you're taxed on your individual tax rate. What is that? That's either 10% up to 28% taxes. If your business, if you decide that you're gonna operate as a corporation and you don't want it to pass over to your own individual tax return, then you can decide now or at some point in the future to just operate as a C Corp from a tax perspective. It doesn't change your business. It doesn't change your product or your services. It just determines how much you will pay in taxes. And as I said, tax corporations have a flat tax rate. In some years, it's 21%. It's been as high as 25%. In other years, I think now it might be 22%. So individual taxes based on your own individual tax rate. That individual tax rate is gonna add up. So like other individuals who have a job, is gonna take that income plus your business income, and then your tax rate and tax liability will be calculated off of that. And some people don't want that. They want their business to stand alone so that they can plan, okay, it's 21%. I know it's 22% or 21% corporate tax rate this year. Then I'm gonna plan for 21%. And then in that case, what you do is you allocate or save a portion, maybe even pay estimated taxes during the course of the year. Okay. Does anybody have any questions about that?
Excuse me, may I say something real quick? The reason why I brought up the LLC, because I got my LLC through Sunshine, even though I'm sole proprietor. And what I eventually want to do is, right now the LLC is on hold, and I want to make my business, what I have now, put it into the LLC, but I got it on hold.
Okay. All right. Well, then one of the things I would want to say is maybe later speak with LaChondra, and she can connect you to me if you should want to have that type of discussion, because every business is different. So the information I'm provided is in a general sense. So it's not meant to advise you, but just to inform you of different practices and things like that. And of course, reach out to an accountant to discuss your particular business and what your business needs are and what your future plan might be. I'm sorry.
Can I ask a question, Ms.
Yes,
LaChondra?
yes,
So
yes.
right before I joined this webinar, I spoke with our CPA accountant. So this interesting, you say that to file a tax as corporation without change the structure. So
Correct.
right now, I said before, I also work for an LLC. I'm the business development. So the owner got a self-employment tax, which is high. And then the accountant said, maybe you can change to S Corp. I say, why change the S Corp? You know, what I heard before, if once you change from LLC to, S Corp, am I right or wrong? Please let me know. Then you cannot change again. There's too much implication. So can you please explain about that?
Okay. Depends on the business, the industry that you're in. So yes, there is some things that you would have to do. Okay, so here's the thing. You won't be able to flip-flop from year to year. Like, okay, I'm an S Corp this year. Next year, I want to be sole proprietor. Now this year, I want to have members. So that's the one thing that the federal government, the IRS, is not want to have happen. One of the key questions I would ask is, you said LLC first, correct, Ms. Ria?
Yes.
Do you have members of the LLC? How
Only
many
one
owners?
member.
Okay.
Only
So
one member.
listen up, everybody. When you have a member of an LLC, so everybody has an LLC, and you only have one member, that means one owner, you are still a sole proprietor. Okay? No matter what, you are still a sole proprietor of an LLC. You're just a sole proprietor LLC. LLC is just a type of corporation, but your tax return is based on whether you wanted to move over to your individual or if you want a separate flat tax for corporate standing. Ms. Rhea, one of the things, I guess the one thing I want to say, and I haven't looked at or reviewed any of your information though, is that as an S Corp, you can still file a tax return as an S Corp, but if you elect to be treated as a partnership by way of filing Schedule Ks, the income is still going to move over to your individual tax return. So the net effect will still be the same. And that's one of the keys. And I'm going to say this because I'm dealing with some clients right now and I want to get back on task, is this. And so feel free to reach out to me later and I'll be glad to have conversations with you all. Your tax return as an individual, you file your tax return, you have a tax liability. If you own a business and your business makes money, you're going to pay taxes. The question is, how will you pay those taxes and when will you pay those taxes? As an individual sole proprietor or LLC that elects to have the taxes attached to their personal Form 1040 tax returns, either through a Schedule K or a Schedule C, you will then pay self-employment taxes at the time that you pay your federal tax liability. Self-employment tax are wrapped up in there if you don't establish yourself as an employee receiving a W-2. But what does this do? In a year where you're making a loss, no problem. You don't have as much of a tax debt. Let's say you make $50,000 or $100,000 next year. Guess what that tax debt is? It's then bumped you up personally. In the year you had a loss, you might be at a 10% or 12% tax bracket. Now your company is doing well, your business is flourishing, your net income turns out to be $100,000 or $50,000. Guess what? It's pushing your tax bracket up, which means your tax liability is going to increase. This is critical. Like when I say this is critical because when you file your individual tax return, and most people are caught off guard with this, they're like, whoa, I owe $20,000 in taxes because the tax rate is gonna only be from 10% or 28%. So now you're personally responsible for paying taxes at that level. So if it was $100,000 and you know it's looking at, let's just use 10% because it's easy for us all to calculate. But if your taxes total $10,000, then you need to be prepared at the time that you file that tax return by the April 15th deadline to pay your tax debt. If you don't, then personally, as you go on to look for property, to purchase things, you're gonna have a tax debt liability out there. And the penalties and the interest that's attached to that will continue to grow. So it's not something to ignore. It's not meant to scare you. This is meant to inform you that it's critical. So as you start out your business, it may be okay for you to have a sole proprietorship and have your tax return filed as a Schedule C and then move over to your personal tax return as a Schedule K. At some point, you will opt out of that and just go for the flat 21 or 22% as a corporation. You can always file that tax status. But like Ms. Rhea said, she worked for other businesses. She has other LLCs. So all of this is going to add up some way or another back to your personal individual tax return. When the business is a corporation, it is standalone. It's separate. It's taxed at 22% for 2019, and you just keep it moving. But on the LLC, sole proprietors, any of these where you have a Schedule K, it moves over to the individual tax return. One more thing, don't file your tax return late. Stay on top of that. If you're a sole proprietor, stay on top of the tax return that you're going to file.
I have a couple of questions. I'm sorry.
Yes, ma'am.
So one is the election for the IRS a one-time election?
No. Well, no. You can change it twice. So like initially when you first have your election, you can say, okay, I'm this. But then you have another option later on to change it. But the IRS has to grant it to you. In most cases, If you're a sole proprietor and you move to a corporation, no problem. It's not a problem. And when I say sole proprietor to a corporation, I'm referring to an individual reporting their business income on a Schedule C or a Schedule K on their Form 1040, and a corporation files an 1120 and pay a flat tax rate. So when you make that election, once you move to a corporation, you're there. Most people don't go backwards to an S Corp or to LLC. I don't even want to use LLC because it's misleading. Most people don't go backwards, but you can be in different types of business relationships. But I want to say people who make money pay taxes. So if you earn in business and your business is doing well, I want to say thumbs up to the taxes, okay? Don't shy away from it, just plan for it. That's the best advice that I can certainly give. Just plan for the taxes themselves. But see an accountant. See a tax, okay, there's tax preparers and then there are accountants. I happen to be both. You have to speak to someone because you won't know your goal. You'll try to purchase a building or a storefront or something like that to sell your product or have your offices. And now you can't move forward because you had this tax debt. And when it's an individual tax debt, the IRS is looking for the member, the individual. LaChondra Davis, we're gonna need you to pay this $10,000, Ms. Davis. We know you operating figure it out accounting, but LaChondra Davis, we need you to pay this taxes. So there's no separation there. In the end, it moves over to your own individual tax return. Okay. There's a question about grant money, taxable. Business grants that are issued to you. Well, yes. For the most part, I'm going to say it's taxable if you're not a non-for-profit. It's still considered income. You're going to operate on it. Okay. Okay. Any more questions? Quandra, you have any or you see any? Sorry, guys, I'm looking at the chat right now.
Can I ask a question?
Yes.
Ms. LaChondra, okay.
Yes.
Another question. So if, let's say a mom have a business, right? She's
Yes.
the one that the single LLC, single member, so proprietor, and then she can, what is the tax implication if she can give that business to her daughter? Is there any tax implication?
To give it to her daughter or file the business in her daughter's name? Like, could you clarify it for me a little bit?
So here, the company that I'm working for, SW2, the owner is not a US citizen or nor a green card holder. So there's a lot of, if we would like to apply for loan, yada, 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 or minority, woman minority, things is hard because it's not a US citizen or nor a green card owner. But then her daughter got a green card recently. So our accountants, previous one, say advised that, just transfer the ownership to the daughter. But our legal attorney said, I'm afraid there's going to be a tax implication. Now we change accountant right now already because the previous one is hard we have a problem with them. So our attorney say that please make sure, is there any tax implication to give the ownership to the daughter?
Okay. For the time period in which you own the business, you're responsible for the income or losses during that time frame. And then it may move to the daughter. So you treat it like kind of like a merger acquisition or a sale. So if you own the business from January to June 30th of the year, and then you transfer the ownership to your daughter, Now that might require a legal transaction. I'm no attorney, so I can't advise you there. But if you transfer the ownership to your daughter, then you would follow through with the paperwork as well. The paperwork with your state. Make sure all those changes exist there as well. Just like anything else, if you transfer the ownership, you got to transfer it all throughout all the paperwork. Now, with that being said, to answer it very quickly is this. Ms. Rhea, the mom would file a tax return reporting the income of the business for the first 6 months of the year, or 8 months or 9 months, however long they held it. And then the daughter, the new owner, is going to file a tax return as well with the business for the time frame that that individual owned it. It's just like the purchase of a home. You might not have owned it for January 1, but you purchased it November 1st. Now you're responsible for everything from November 1st to the 12/31 of the year. And that's the way that you would approach that. Okay?
I see.
But as far as the tax implication, it wouldn't be like an immediate tax consequence to you or anything like that. But it's just based on what other income are you reporting besides the business. That's the key factor. That's the key factor. So that's one thing. You might talk to one individual and they'll say, oh, I did this. I'm sure you all have heard the stories, or I got this back on my taxes, or this is what happened. What they're not telling you is the specifics of their situation that makes it so. So you might have some other things that are going on in your personal tax situation, whether you have dividends, income, some other form of income besides your business. You might have W-2s. You might even have a 1099 from some other place that you worked. All those things together are considered income. And so that's what a tax return does. It reports the total income for an individual or a business.
Okay, I got it. So it's just either the mom or the daughter thing. Yes, got it. Fine. But for her to transfer the ownership to the daughter, it just as long as we have all the paperwork, you know, put it in written, what is he gonna do, what he cannot do, this kind of thing. It's just simple, right? I just do like that.
I would err on the side of saying yes, but definitely consult an attorney and then take a look at what the state regulation is in Texas. Okay? What does the state regulate? The state dictates that. Federal taxes are dictated on the federal side, on the federal level, and on the state side, the states determine how businesses are formed, what paperwork is required, that type of thing. So like in the state of Texas, there's no individuals. State of Texas doesn't have state taxes for individuals, but they probably do for businesses though. So that's where it might be a little bit of a complication, but it's not something that can't be worked out or done smoothly, okay?
Okay, thank you, Ms. LaChondra.
Oh, you're welcome. Okay. Any more questions about that? Okay, all right.
There is one question regarding sole proprietorships. How many can you have?
How many can you have? You can have as many as you can manage. Now, what you have to do is you have to keep separate books for everyone, okay? Each business has to have its own separate books, separate bookkeeping, your income and your expenses. So for example, in the case of Ms. Moore, who, let me see, from my notes, you work with 501(c)(3)s, you have book sales, you've written books. So if you have multiple businesses and you sell a product and somebody else sells a product too, let me see, was that Miss Rita sells food, has the food. Okay, and I think Mina, is it Mona Ford? She sells products. Okay, so you can have different businesses, but from a tax standpoint, you have to define the code. When you apply for an EIN number, there's a code selected with your business. You tell the IRS, this is the business that the industry that I'm going to be in. And so that code is attached to your tax return. So you'll just have to create separate EINs for each of the companies that you own. And then file your tax returns accordingly, have good accounting and bookkeeping done, so that you can match the income and expenses for each business industry, and then you'll be okay. Yes, I can clarify the difference between a Schedule K and a Schedule C. A Schedule C is Schedule C is a profit and loss that's attached to a Form 1040. Schedule Cs go along with the Form 1040, an individual tax return. A Schedule K is the net operating loss from a partnership or limited liability corporation or an S Corp. So let me say this. You have a Form 1120S, which is your S Corp tax form, or your Form 1065 from a partnership. Your business income and your business expenses are calculated and reported on that document. At the end of that document, you have a net income or loss. That net income is reported on a Schedule K for each of the members of the organization, of the ownership. Each member or persons that own this, there is a Schedule K presented in their name with their social security number, allocating the portion of the income or loss to that individual. That form is a Schedule K. That Schedule K is reported in the income section of Form 1040. There's one line for a Schedule K, there's another one for a Schedule C. That's the difference. 1065s, partnerships, limited liability corporations with multiple members, they all have Schedule Ks. A Schedule K is calculated after the Form 1065, which is a partnership, or the 1120S, which is an S Corp that had multiple partners or multiple members, are calculated. Okay, and you can be a sole proprietor that opt for a schedule, a 1120S, which is an S Corp, and still have a Schedule K from your business. It doesn't matter. The difference is that you have a different type of tax form. So when you all heard about all the SBA loans and the PPL loans where they wanted to see your tax return. You either were going to have a Schedule C for sole proprietor profit and loss, or you're going to have an 1120S or 1065. That's it, 1065s. The forms are similar but different. But they do the exact same thing. They report the exact same thing. So you can handle, so here's the thing, you can handle 1065 tax return. Oh, this is how my business is doing. You can give that to someone and they never have to look at your individual tax return. But when you have a Schedule C, it's inside your 1040 form for the year. It's attached to it. So those two, so they'll say, oh, let me see, let me do this. And that's pretty much it.
Great. There is a question about an EIN, and she wanted, particular person wanted to get another EIN, but the IRS told her she could only have one. Is it, I'm assuming it's for the same business, Miss Ford? You wanted to use an EIN, two EIN numbers for one business?
Well, yes. Well, see, when I had when I got my EIN, and then I turned around because I filed for sole proprietor, and but when I was told that when you do when I was just doing just my T-shirts, and I got the EIN number for it, they told me that was fine. So then I was adding other like cooking if I wanted to, cause I was starting a catering business too, and also when I was gonna file for an EIN number, they told me that I couldn't file for another EIN number because they said you get only, when you file for that first EIN number, that's what they just give you. They don't give you multiple EIN numbers, and they said that because you get one EIN number and then whatever you have going on in your business, everything goes up under that umbrella. That's what the IRS told me.
And you spoke to the IRS directly?
Yes, I did.
Okay. That is a loaded question. I'm going to do my best to answer the question. Again, it's on a case-by-case basis. First things first. An EIN is equal to a social security number. How many social security numbers do you have?
1.
Okay. Number 2, we talked about the classification of your business. When you apply for that EIN, you tell the IRS, this is the industry that I'm going to be in. So if the other items that you were going to do, your general merchandise sales is what it sounds like to me. Because it's general merchandise sales,
Okay.
you would only need 1 EIN. Well, let's say you were going to do what Ms. Watson is doing, and you were going to create your own construction company, and you got to have another EIN because the business code is entirely different. When you would apply for insurances and things like
Well,
that,
so
related to that, entirely different. So the answer that they
well,
gave,
that's what they told me.
here's what I'm saying. The answer that they gave you is very well an accurate answer because you were still in the business of selling general merchandise, right?
Okay.
It's just different types of merchandise. Right. That's when you go down to a state level or a local level where you would have to acquire different business licenses, and then you might have to do a DBA. You'll have DBA names for maybe, catering, a DBA name for your soaps or T-shirts and things like that.
See, that's why my business name is Mona's Creation, Catering, Realty, etc.
Okay. Did you say really? Did you say realty? I'm sorry. Could you repeat?
That's real. Yes, I did. I said Mona's Creation, Catering, Realty, etc.
Okay. All right.
That's what I said.
So now, let me say this. We'd have to have a separate conversation about your businesses and how do you want them, if there's an umbrella, if you're creating a holding company or not. That's not a tax question. That's a legal question that you would have to answer in what is your expectation and how do you want to create this corporation? What do you want it to do? Like, I mean, I don't know any other way to say it, but that's a different question. So it's not a tax or a financial question. It gets into what is your business plan? What is your business goal? And yes, sometimes you do have to have separate businesses, but the one thing you didn't say to me is you did not say that you created a separate corporation, that you were trying to create a different LLC. That's where you separate them from. And so if the question to the IRS was, I want to do this, then they gave you the I answer. If you had went to them and said, I'm establishing a business and this is my business name and I want an EIN for it, you can get an EIN for a new business. But if you attached it to your old businesses, that changes things.
Okay. All right. Thanks.
Okay.
Well, we have time for a couple more questions. It's 11:58. I don't know if are you still going through your presentation or if you wanted to close out on your presentation?
I would like to close. Well, is there any more questions? Basically,
not in the chat.
Okay, not in the chat. Anybody on the phone have a question? Because I know there's a Michelle, there's a Martine Hines. Is there anybody else that have a question? Okay. And okay, great. So one I want to say is that you all asked great questions today. And there's no question that shouldn't be a question that's answered, because when it comes to business, when it relates to business, it's important that you understand or you know what your vision is for your company, because most people don't realize this. Earlier on, you establish these things, but if it changes, okay. You just change with it. You just file the right paperwork and you get it changed. So it's not the end of the world. If you started out doing one thing and then you say, hey, I'm going to move over to real estate, then you have to follow the industry guidelines for real estate. If you want to sell a product, you have to follow the industry guidelines for product sales and service. There are sales tax, there's SS tax, there's all types of taxes depending on what it is that you want to do or what service you're in. So I wouldn't encourage to have 10 businesses unless you can manage it like that. But you do want to determine if what you're doing falls into the same industry or not. And if it does, then you just have DBAs for the business. And then you have to have a good accounting system. That's the one thing that we didn't talk about. You have to be able to account for your information because no one will be able to prepare your tax return if you don't have bookkeeping and accounting records of some sort. So maybe LaChondra has another series or workshop that's catered directly to that. That would be something interesting on how to get started. How, you know, you can start as simple as an Excel spreadsheet, you know, tracking your income and your expenses. Keep your business income and expenses separate from your own personal. Just because you have a sole proprietorship does not mean you commingle your individual and your business expenses together. Create a separate bank account, manage it separately. If you're gonna pay yourself, pay yourself, write yourself a check, but keep them separate. Okay? So
Great.
who's filing a Schedule K and who's filing a Schedule C? You all are
You can
muted.
put it in the chat if you have. You can put it in the chat, or you could unmute yourself.
I'm filing Schedule C.
Okay.
Rhea, a Schedule C. Anyone else? Any Schedule Ks? By show of hands, the icon, or just guess in the chat. Okay. Everybody's still thinking about it? Okay.
Okay.
Schedule C for Sandy. Wonderful.
Okay.
Schedule C for Jackie Franklin, Whitestone.
Okay.
Schedule C from, okay, Ms. Watson. Great. Well, this has been very informative. I see all the good information or feedback in the chat. Thank you so much, Ms. Davis. We definitely would love for you to come back and maybe do something different, a different type of workshop. And you've done an excellent job of breaking things down. So. Okay. Well, I will make sure that everyone on this call gets Ms. Davis information. She is a certified tax preparer and everybody needs their taxes done. So please do reach out to her if you need any assistance in that area. Okay. Was there anything else you wanted to share, Ms. Davis?
No, I just want to say thank you for having me today. And I want to thank Jason with Wintrust for partnering with us. And I also want to thank Sunshine as well. And I just want to say, if you're in business or you're thinking about it, go for it. Go for it. Go.
What about you, Miss?
Just go for it.
Thank you. What about you, Jason? Did you want to have a few ending words?
Nothing other than, thank you to Miss Davis for, such, insightful information. I think that she really did a good job of being specific. And I think that, as she, spoke to individual clients, she offered, really, really good advice for them, especially with the young lady who had multiple businesses under that one umbrella. That was a really good conversation for her. So I'm grateful to have been a part of it. Thank you all very much for your time.
Great. And thank you all for your patience with my technical difficulties. But once again, we do have another workshop tomorrow, and we have one next week, two next week for paychecks, and then another Wintrust succession planning. So if you all are looking at what happens to me if I walk out and I don't know, get hit by a bus or ran over by a herd of elephants, what's going to happen to my business? Then next week, we're going to be talking about succession planning. And so hopefully you all can join us. Okay. Well, thank you. Have a good day, everybody.
Bye.
Bye.